Moneymakers, welcome to another episode of Taking Stock Live. I'm your host, Kalila Enriquez Reynolds, and we're bringing you all the latest business news and telling you how it will affect you and your money. So can you believe Money Media is 5 years old? We turned 5 on Sunday, June 29. That was the official day of incorporation of the company, and boy, has it been a ride. So to celebrate, we're giving away a ton of goodies this evening, and of course, we do have some discussions to do. Our analyst panel is standing by with the latest on the foreign exchange situation, advice from the IMF, what is the BOJ going to do, all of that and more. But of course, first, we want you to hit that like button, subscribe to this channel, and share with a friend. Tell them that Taking Stock is live and popping on YouTube right now and Facebook. We're also streaming live on Facebook, so check it out. And also, as usual, let me know in the comments where you're joining us from, what part of Jamaica or what part of the world. Drop it in the chat below and have those typing fingers ready because, like I said, we'll be doing quite a few giveaways this evening. We want to give back to you to celebrate our 5th birthday. Now, come on, let's get this money. On this episode of Taking Stock, Money Media is 5 years old, and we want to celebrate you with some awesome giveaways. Plus, the analysts weigh in on the latest market developments. The Organization for Economic Cooperation and Development just released its mid-year economic outlook. How does it affect you and your money? And the IMF thinks the BOJ should loosen its reins on the Forex market. We'll discuss. Barita Investments has raised almost 8 billion Jamaican dollars through its bond offer, making it the largest bond raise so far this year. That's about 50 million US dollars. The company had initially wanted to raise just over 6 billion JMD. Barita CEO Ramon Small Ferguson said the offer's success is a signal that the local capital market remains strong. The company said it plans to use the money to acquire a strategic asset, strengthen its overall liquidity, and improve its investment banking capacity. Manufacturing and distribution giant Wisynco has announced plans to launch its own brand of alcohol in the near future. The company received approval last week from the National Environmental and Planning Agency, NEPA, to build a brewery at its St. Catherine facility. According to the company, the plant will also significantly expand its production capacity. Wisynco said the brewery will give them an opportunity to create beverages tailored to Jamaica's evolving tastes. They did not give a timeline for construction to start. Caribbean Cement says it will be able to produce more cement thanks to a 42 million US dollar investment. The company officially commissioned the Debottleneck project last week. The project, which was announced 3 years ago, adds several new features like a new main baghouse and kiln chimney. Carib Cement said the upgrades to its Rockfort facility will improve production capacity and operational efficiency. The United States and China have reportedly reached a tentative trade deal, calming their escalating trade war. Both countries have imposed reciprocal taxes on imports. China has reportedly agreed to resume shipments of rare earth minerals to the U.S., while the U.S. will loosen restrictions on computer chips entering China. President Donald Trump said he also expects to have a trade deal with India soon. On the other hand, the U.S. cut off trade talks with Canada last week, putting a further strain on trade relations between the countries.
What's Hot was brought to you by JMMB Group, your best interest at heart.
Class of 2025, education doesn't stop just because you're done with school. Continue your financial education after graduation with the Money Mission Workbook. Whether you're stepping out into the working world or preparing for higher education, you could use an extra hand with getting your finances right for the next stage of life. Head on over to Amazon.com to pick up your copy today. Let's get this money. Welcome back. Now let me shout out our viewers. Let's see who we have. Learn, Grow, Invest says good evening to everyone. Warrell Anderson also saying good evening. We got Benjamin saying let's get this money from Arizona, formerly Old Harbor. Humble Boss is saying good night from Negril. We've got the Diplomat. Good day straight from ATL, watching keenly. Michael is in Portmore City. Unknown Gluttony saying good evening from Westmoreland. We've got Orlando in Grange Hill. Eileen is in Canada. Wealth with Rec is in Vernonfield. Clarendon. Dalton is in Discovery Bay. Unknown is sending us birthday greetings. Thank you very much, Unknown Gluttony. Royston is in Red Hills. Adrian sending us congratulations. We also have Dwight saying good night from Spanish Town. Big up to all our viewers at home and abroad. Home and yard and abroad, wherever you are in Jamaica or wherever you are in the world. Drop a comment in the chat. Let us know where you're joining us from. And shout out especially to our viewers in the US, UK, and Canada, because you may have heard this if you're a regular viewer. You can now send money safely and securely to Jamaica using Tap Tap Send if you're in the US, UK, or Canada. There are no fees sometimes or low fees depending on what location you are in. You can get fast money transfers and it's reliable. And you can also get $10 on your first transfer when you use the code Kalila10. That's KALILAH 10. Kalila10, and you get an extra $10 on your first transfer. And just to remind you that this is only available for our viewers in the US, UK, and Canada. If you're in Jamaica, it's not going to work. It's not going to allow you to download in the App Store. So go to the App Store, download Tap Tap Send, and use the code Kalila10 for your first money transfer. All right? Now, like I said, it is our birthday. I feel like singing happy birthday to us. Happy birthday to us. How the busy signal version go again? Happy birthday, my friend. One more year upon them. Yes, we are celebrating our 5th birthday, and to commemorate, to celebrate, we do have a few giveaways, and I see that we have our very first giveaway winner tonight. Let me see who it is. Our very first winner is Warrell Anderson. Woo! Congratulations, Warrell. You win yourself a copy of the Money Mission Workbook. Now, in order to collect your prize, let me see what the instructions are. In order to collect your prize, you are going to have to send your contact information to Sashell, SASHELL, Sashell at moneymediaja.com, along with proof that it is your YouTube page. And we're going to get this out to you. So congratulations to our first winner of the evening. Let's take a rewind. Let's take a look back at our first 5 years in action. So you've been supporting Taking Stock on my content all over social media for the past 5 years. Hi guys, it's time for Money Mondays.
Kalila, you're the reason Merton Abroad started investing.
I'm Kalila Reynolds, and it's time for another episode of Money Moves, JA.
Keep up the excellent work of educating people about business and finance.
Hey, money makers, welcome to another episode of Taking Stock Live.
And I want to commend you on your work in giving financial literacy access to Jamaica.
So people asking if you would be interested in mentoring young Jamaicans right now. Hello, and welcome to the first ever Ask Mike. Oh my gosh, this is so exciting. Hey, money makers, welcome to the official launch of my brand new Money Mission Masterclass.
Box of money. Box of money. Yes. Everybody, welcome to the Money Mission. Good evening.
I want to invite you to take the next steps towards your own journey to wealth.
Let's get this money!
Wow, 5 years. I even forgot about some of those. So we started with Money Mondays. That was the very first program. Then we had Money Moves with Exim Bank. Then we had What's in It for Me with the Ministry of Finance for a while. We've had over the years, we had the Remax, the Property Source podcast. It's Remax, which was last year. Of course, Taking Stock, which is the flagship show that survived all the years. We have the Bottom Line. Ooh, so many things that we've accomplished, including, launching the websites, launching the master class, now having, the book out. We now have moneymediaja.com, moneymissionja.com, KalilaReynolds.com, and it has been quite a ride so far. Any entrepreneur will tell you these toddler years are the difficult years, the most difficult years. And trust me, we have had our stumbling blocks, but we're still here, hoping to see another 5 and then 50, and who knows what the legacy is eventually going to be. Let me take a few comments before I continue. Mario says, good evening from Manchester. Adrian telling us congrats on achieving 5 years. Chairman saying greetings and bigging up Tap Tap Send. Big up Learn, Grow, Invest. Your son loves that version. Which one? The Busy Signal version? Busy Signal is a brilliant businessman, He makes these timeless classics that are going to play over and over and over again. Imagine how many YouTube views that song probably has, because it plays all the time. And the ones about Jamaica as well. Every time independence, emancipation, they play them in schools. Very brilliant strategy for an artist. Jason says it's Starbucks' 5th birthday in Jamaica today too, I think. Oh, wow, we started around the same time. Interesting. Eileen is telling Worrell congratulations. And Worrell, there he is, our first winner, says thank you. I was not expecting this. Awesome. So we're going to have a few more giveaways, including from our sponsors, some gift baskets. We have some more books to give away. Maybe I'll even give away a course or a premium membership. We'll see. We'll see how the evening progresses. But right now, let's get into the main discussion of our show, because the Organization of Economic Cooperation and Development has put out its mid-year economic outlook. What it is saying and how will this report, what is it saying and how will this report impact you and your money? How is this report going to impact all of us and our investing strategy? Here to discuss is one of our OG analysts. We've got with us Julian Morrison, founder of Wealth Watch JA. Welcome, Julian. Welcome back.
Hi, Kalila. Congrats on your major achievement. It's a lot of work.
Thank you.
Thanks for having me here. I've been here since March 2020. So this is a big win for me too. So it's almost like over 5 years. So yeah.
Absolutely. You've been growing along with us, and we see the growth in your career too. Congratulations on everything you've achieved and are
thanks.
yet to achieve, because I know big things coming from Julian. So today, Julian, you're talking to us about the OECD's mid-year economic outlook. But first, tell us what the OECD is for those who've never even heard of them, and what role it plays in global economics.
So the OECD is a body that tracks economies around the world, especially G7 states. So G7 states, G20 states, they're pretty much developed countries for the most part. The United States, China, and some other states that are growing rapidly like Vietnam. And what the body does is to track the trade relationships between these different states, and also they have like an economic monitor, just the way the World Bank does, and also the IMF. So I found that their outlook was very realistic. I found that they were very plain in their discussion, even though they had the technical robustness. So I wanted to share that to give greater context of what 2026 will be like, because now it's time for us to start talking about next year, and also how we can use that data now to position ourselves in terms of investments.
So how is this report going to impact our investments? You started alluding to it just now.
Well, going to get right into that. So I'm going to share my screen. Can everyone see?
Yes, we're seeing your screen.
All right, let's go. You can still see me, or you're just seeing the screen only?
We can see you and the screen.
Okay, great. All right. Focus on the screen. So we are heavily reliant on the performance of the U.S. economy, as we know. In summary, the U.S. economy is expected to slow slightly relative to the performance for 2025. So for context, the U.S. long-run growth average is 2%, and the OECD is expecting a result of 1.6 for 2025 and 1.5 for 2026. So what this means is that there's a significant
Can you zoom in on the part that you're focused on?
here, the first line.
Okay.
I was talking about the first line. So the factors around immigration, the factors around the risk as it relates to the tariffs, and also how firms plan their hiring, how they plan their investments, how they plan their expansions, purchasing of fixed assets like vehicles, property, plant and equipment, etc. All of those things are impacted by these policies. But it doesn't mean that the S&P 500 couldn't grow further, because as we know, the growth in the S&P 500 is largely driven by the dominance of these tech stocks. And the tech stocks that are dominating the market would be affected by some of these policies, but what it will do is that it will affect the sectors that we look at, because sector investing is very important as a theme, especially for our viewers that look internationally. So there are sector ETFs, there are other sector products from different brokers that investors can look at, and how you pick your sectors is very important as the environment changes. As we know, the US is trying to get their debt under control. Recently, Moody's downgraded the US by just one notch on the scale, and they would be in line with the rating that Fitch had before, which would be AA from AAA. And what that means is that the structural base, or the baseline to the downside of US interest rates, would now be higher, because the US is now seen as a riskier territory to invest in relative to where it was before. We know persons look at the US as a safe space. It's a place where cash goes for safety and resilience, but it's just to say that the US dollar is not what it used to be, not just because of inflation, but because of where the US is now in terms of debt. So the long run, it still has significant promise. Inflation is still expected to abate, but not as quickly as most persons would have realized. So it means that in terms of working out the debt, working out inflation, and also just in terms of the general investing posture, is expected to be more long term. So let's look at another metric, for example. The unemployment rate is also expected to rise just slightly by 10 basis points in 2026 to 4.3% compared to 4.2 in 2025. So it means that labor markets will have less slack. It might take a little bit longer for most persons to find a job in the US, and that can affect things like remittances in Jamaica, because the health of the US labor market has a very strong link to remittance flows in Jamaica. And we know that remittances have a very strong linkage to consumer spending in Jamaica. Believe it or not, we don't have a strong social safety net as yet. So many Jamaicans, even persons who are in the working class and the middle class, their income is supplemented by remittances, not just persons who are considered to be below working class. So what that means is that we may see slower growth. So it's important for us to look at companies that can push through conditions like this. So what do I mean? Companies like the Fontanas of the world that sell necessities. Most persons believe that Fontana makes most of its revenue from the knickknacks in the store, like the retail items, but most of the revenues and the earnings is driven by the pharmacy.
Ah.
Yeah, they've said it multiple times in their management discussion. The real driver is the pharmacy, not just the retail stuff. So another example is,
And I was telling Anne the other day when she was on that many of us don't even think of Fontana as a pharmacy anymore because they
exactly.
just do so much. And she
Well,
said that they were at one point considering dropping pharmacy from the name,
wow,
but
yeah,
they
yeah,
still make
yeah.
most of their money from the pharmacy side.
Yes, they do. And just from a sales standpoint, pharmacies are not pharmacies are not sexy. When you say you're going to the pharmacy, people are like, well, you're sick, like why are you going there? But if you make it into an experience, then it can be something holistic. You can have a family member that's sick or they got a prescription for whatever it may be. And you go with them because it's an experience. You're curious to see what is on the shelf, and you're in one aisle, and before you know it, you're on aisle 3, aisle 4, aisle 5, and you're buying 5 items instead of one. So that's a big part of Fontana's strategy in terms of making it an experience and not just a pharmacy. A pharmacy isn't so much an experience, and we lack experiences in Jamaica. So that's a big part of the appeal. I remember during the pandemic, there were many persons who left their house just to go to Fontana, just to go and look. And that is the fact that again it's attesting to the actual retail experience of the entity. More recently, there's the acquisition of Monarch's retail footprint that's expected to be a significant growth driver for the company going forward. Um, So that's something to look forward to. They would have gotten several new locations. And if we notice, most Fontana locations are close to a stoplight or a major intersection. So that's a major driver for foot traffic. But beyond that, Indus Pharma is another company to look at. Wysinco, we just spoke about Wysinco's growth prospects into beverages and going into a new beverage line which would actually complement its current product portfolio because we know that most of Wysinco's products would be chasers for alcoholic drinks. So if they start producing these beverages, they already have the supply chain, they already understand the broader beverage market, and they can now start selling complementary products to their core product base, which is current. So they have a lot of cash. They can invest. They don't need to borrow as much. They borrow because they want to, not because they have to. So these are some companies that investors can look at, given that our environment is not expected to be rosy for the next 12, 18 months because there are certain kinks that the macroeconomy has to work through. This is very important, right? So this line here, private consumption is basically consumer spending. Consumer spending is expected to fall from 2.1 to 1.3. That's a significant fall off.
Wow.
So it means that consumers are going to be very price conscious in the next year. And this is in the US. And these are our relatives. This has very real implications for Jamaica. We looked at the last report from Main Event, and Main Event actually spoke about how soft the event space was, which speaks a lot about consumer spending. And it means that because we're seeing consumers be more price sensitive and they're more conscious of their spend, it means that the products that will do well in that environment will also be different. So that is why it's important to look at some of the companies that we would have highlighted.
Sean has a question for you, Julian. Sean wants to know what makes these companies that you mentioned resilient to the slowdown of the economy?
Some firms are what we call they're more cyclical, so they rely more on the business cycle. The business cycle is talking about the natural growth pattern of the economy, and there are two main growth patterns. There's a boom phase where the economy is on a major upswing. There's high employment, lower unemployment. There's greater consumer spending because consumers are earning more from these jobs, etc. And that would cause businesses that generally sell discretionary items or items that persons spend when they have extra income or discretionary income to do better. So events are considered a part of that category. Many financial institutions are also a part of that, especially because most businesses are actually discretionary. They're not staples. Staples would be the opposite. Staples would be businesses that sell products that are not reliant on the business cycle. So they're non-cyclical. So they sell necessities. So entities that supply medication, they have very strong brand value, and that brand value is also tied to something that people need. So, for example, as it implies, beverages, water, bread. To an extent, there's a debate to say fast food is consumer discretionary or staples, but it really depends on where it is. For example, persons will say in a recession, KFC will still do well. And there's an ongoing debate around that. My side of the fence is certain fast food is definitely, there's definitely a case for it to be like a staple, just because of how much it is a lifestyle product. Persons buy out of habit, as opposed to saying, hey, I have an extra 2 grand, let me spend it at KFC for argument's sake. If persons are going to go on the road for one thing, KFC is going to be a part of that experience more often than not. And I'm just using KFC as an example. But there are other brands that would fall into that category. You could say the same thing about patty. I don't think people are going to cut back on patty because of a recession, for argument's sake.
They might even have more.
Yeah, or they may cut back on these products less than others. So, for instance, they wouldn't go to the restaurant where they're going to buy lobster. They're more cut back on the lobster dates and those kind of experiences, as opposed to cutting back on how many times they have patty, for argument's sake. So this is the distinction between the types of companies we look at as investors, because how you invest when the economy is slowing down is not how you should invest when the economy is speeding up. And we expect 2026 to be more sluggish than 2025. We do expect inflation to slow down a bit, but inflation should not slow down to the point where the central banks just rush to cut interest rates, because central banks cut interest rates when economies slow down too much. And when economies slow down too much, they try and speed it back up by lowering interest rates. And when you lower interest rates, you're injecting money in the economy to speed it back up. We're in an awkward position where, yes, the economy itself is slowing down, but inflation is not slowing down as much as it normally would have. And this is tied back to the uniqueness of the pandemic. A lot of the pandemic and post-pandemic inflation is supply side. And because of what happened in the supply chain, it has become more complicated. You just find that prices are not, inflation specifically, inflation has not been falling as fast as expected.
But isn't inflation like right where the Bank of Jamaica wants it to be? We're right at about 5%.
Yes, but as we noticed, there are a lot of upside risks to inflation right now, especially from the international standpoint. We're talking about the possible upside in energy prices because of the tension we're seeing geopolitically. There's also still pressure on oil prices because of the very real escalation of war in other territories. The Ukraine-Russia conflict is still ongoing. Also, commodity prices, they haven't been going up as much, but they're still rising. Food prices are still an issue. So what is masking inflation is the fact that year over year, energy prices have been either rising more slowly or declining. But energy still has upside risk because of some of the factors that we mentioned. It's not that the broader inflation basket itself is cooling down. We really have a muted result because of one, energy's dominance, and two, the fact that energy has either been flat or declining relative to the other components in the basket year over year. So the truth is, we're not fully out of the woods as it relates to inflation from a big picture standpoint. It's just that energy prices gave us a break. And what's critical is not so much inflation just in Jamaica, but we'll have to watch the US dollar in and of itself, because Jamaica is a net importer. We import 4 times what we export. So let's say inflation continues to sit in Bank of Jamaica's target range. If we have US core inflation at 2.7%, when the US Central Bank has a target of 2%, it means that US core inflation is still above the US target, and it means that US interest rates won't fall as much, because interest rates, again, they tend to decline when inflation declines. But if US inflation is a problem, it's a problem for everyone, because we're not going to the international market with Jamaican dollars, we're going to the international market with US. And what I'm describing has a big factor in why you have seen so many interventions from BOJ in BFixit. There's a very strong link between the two. If end users have to find more US dollars to buy the same supplies, it means that they're going to have higher bids in the market. And the supply of US dollars hasn't increased that much, but the demand has increased. Because if I have to buy 50 pounds of flour every week just to stock my shelf, and that 50 pounds on the international market is more expensive, I'm going to have to demand more foreign currency from the same market to supply my shelf. So again, it's not good to look at these variables in a vacuum and just say, hey, BOJ, they're fine because of the target rate. We have to look at everything together as a composite, and more so where we are in terms of the benchmark currency, which right now is the US dollar. So US inflation is still a problem. It means that inflation is still a problem, even if BOJ doesn't say so.
And we're going to be talking about that in the next segment with Clive Charlton from JMMB as well. Stay with us, Julian. We have more to talk about, including, like I mentioned, this issue with the FX rate, exchange rate, BOJ, IMF recommendations, and the story of the day that everybody's talking about, JPS, and them not getting their license renewed. But before that, is it time for a giveaway now? Let me see. Where are we now? Giveaway. Yes, it's time for our second giveaway. And this giveaway comes to us courtesy of the Sagicor Foundation. It is a gift basket. And the first person to answer the question correctly in the chat will win this gift basket from the Sagicor Foundation. Here is the question. Name one beneficiary from the 2025 Sigma Corporate Run. Easy question. Name one beneficiary from the 2025 Sigma Corporate Run. You can even Google it real quick if you want to. The first person to answer that question correctly in the chat will win a gift basket from the Sagicor Foundation. Let me see if we have anybody yet. All right, I'm going to take the answer after when we come back. So right now, it's time for tonight's poll question. So here is your poll question. How do you feel? Oh, it's a controversial one. How do you feel about Jamaican athletes switching their allegiance to other countries for better pay and more support? Ooh, this was a hot topic last week. Turkey. How do you feel about Jamaican athletes switching their allegiance to other countries for better pay and more support? Here are your options. A, good for them. Put yourself first. I gotta put me first, Lucius. B, they should be more patriotic. C, I don't care. Do you, boo? D, other, leave a comment. How do you feel about Jamaican athletes switching their allegiance to other countries for better pay and more support? A, good for them. Put yourself first. B, they should be more patriotic. C, I don't care. D, other, leave a comment. Let us know in the chat. And while you're at it, you can answer our giveaway question as well from Sagicor Foundation. Name one beneficiary from the 2025 Sigma Corporate Run. Leave your answers in the chat, and you can take the poll over in the community tab of our channel or on X or in the email tomorrow. I see that our email open rates are back up, guys. So that issue we've been having with getting the emails to your inbox rather than to spam, we've finally been able to resolve it. But still, just in case, you can still check your spam and mark us as safe. But you should be seeing our emails back in your inbox as well. And for those of you who are not subscribed to the newsletter, go to getmoneynews.com to subscribe. That's getmoneynews.com. Up next, we've got your market recap. and the analysts are standing by. For your June market recap, brought to you by MyMoneyJA.com, the official data partner of Money Media. The JSE Combined Index fell 2% in June. That's about 7,500 points. 131 stocks traded across the main and junior markets. 43 made gains, 79 lost value, and 9 stayed the same. 380 million shares changed hands on the Jamaican dollar market, valued at $2 billion. Now let's see who had June's biggest gains. Iron Rock Insurance soared 58% to open July at $6. Jetcon gained 44% to start the month at $1.44. And 138 Student Living Variable Preference was June's third biggest gainer. The stock gained 17% to start the month at $220.11. On the losing side now, MPC Caribbean Clean Energy USD was last month's biggest loser. It's down 27% to open the new month at 39 cents US. MFS Capital Partners fell 18% to open July at 41 cents. And AS Bryden & Sons was also down 17% to open at $24.25. Over on the Trinidad and Tobago Stock Exchange, the composite index lost 18 points in June. That's about 2%. Massey was the most traded stock of the month. It fell 1% to open July at $4 TT. LJ Williams B was the TTSE's biggest gainer, up 25%. It opened the new month at $1.25 TT. On the losing side, JMMB was June's biggest loser, down 6%. Over in the U.S., the Dow Jones gained 4% in June, while the S&P 500 was up nearly 5%, and the Nasdaq climbed nearly 6%. It was a rough month at the pumps in June. The price of 87 gas rose $4.44, while 90 gained $5.27. Meanwhile, diesel prices climbed $12.06. In foreign exchange, the Jamaican dollar lost 25 cents against the U.S. dollar in June, closing the month at an average $160.36 to 1 U.S. The JMD weakened against the Canadian dollar, closing the month at $119.36. The JMD also weakened against the pound and euro. It lost $3.72 on the pound and $7.50 on the euro. Finally, on the crypto markets, Bitcoin prices were up almost 4% in the last 30 days, trading at $107,519 on Monday, while Ethereum prices dipped 0.5%, trading at $2,500 on Monday. Market Recap was brought to you by MyMoneyJA, the official data partner of Money Media. Like this show? No, I mean, do you really like this show? Well, support us by making a donation on Patreon. Your support will go a long way in allowing us to continue creating content like this and keep taking stock free for everyone. Go to patreon.com/moneymediaja. The link is in the description.
This segment of Taking Stock, The Analyst, is brought to you by JMMB Group, your best interest at heart. Disclaimer: this is not intended as financial advice. Please consult a licensed financial advisor before making investment decisions.
Welcome back. We have a winner from the Sagicor Foundation. Our winner is Ramon Walker, who answered KPH. Yes, you are right, Ramon. KPH is one of the beneficiaries of the 2025 Sigma Corporate Run. The other beneficiaries are Father Holong and Friends Foundation, as well as the Sir John Golding Rehabilitation Center. So congratulations to Ramon Walker. Please email Sashell, that's Sashell, Sashell@moneymediaja.com to claim your prize. And you also need to send her proof that it's actually your YouTube page. So send send her an email and we'll get your prize to you. It's a gift basket from the Sagicor Foundation. Let me take some of your comments as well regarding the poll question. Our poll question this evening was about the athletes who switch allegiance to other countries for better money and support. What do you think about Jamaican athletes who do that? Your options were A, good for them. You got to put yourself first. B, they should be more patriotic. C, I don't care. Other, leave a comment. So here are some of your comments. We had Learn, Grow, Invest says, I don't see any issue with it. They don't get enough support as is. And so they commented, A, you got to put you first. Michael also says A. Antoinette also says A. Neil also says A. Learn, Grow, Invest says they put themselves in a position to support a country who didn't return the favor, so they had to make other decisions. Eileen says A, athletics is a job just like any other. Ryan says A, good for them, pay yourself. Jamaica is always a place that produced laborers for the first world countries. Go get your money. Natoya says, I'm 50-50 between A and B. So A was, get your money. B, be more patriotic. Lavaine says Turkey had the largest checkbook, so they went. Sean says D, look what happened to Bolt. Jamaica stole his money. If Jamaica has nothing to offer them, best go where it's better. But going to Turkey, of all places, is confusing to me. What's so confusing about $500,000 US? Big money. Ramon says, thank you. Ramon is our prize winner from Sagicor Foundation. Worrell says A. Mike Jacobs says A as well. So most of you siding with the athletes. Sounds like you would take the money too. Hey, I ain't hating. It is what it is. Let's get into our analyst discussion for this evening. Joining us is senior trader at JMMB, Clive Charlton, and we also have Julian back for this segment. Welcome back, Clive and Julian.
Thanks. Just let me know if you're able to hear me.
Yes, we can hear you.
Great. Well, thanks for having me. Julian, good to see you again, man. Been a while, eh?
Thank you, my brother.
Yes, man. And Kalila, congratulations on the 5th anniversary.
Thank you.
There's another 5 to come. Greater glory. So looking forward to that too.
Yes, God willing. All right, so we're going to continue the discussion that Julian actually started about the BOJ and the foreign exchange market. Right now, we have this report from the IMF praising Jamaica in many areas. However, they are saying that the BOJ needs to scale back on those interventions in the market. And just to give our viewers a little understanding of what's going on, the BOJ has intervened in the market 17 times this year. Julian mentioned it, some of the reasons why.
Yes.
Over $500 million, I think, well, last I checked, it was about 400 million. So almost $500 million US has been injected into the foreign exchange market by the Bank of Jamaica. The IMF thinks that BOJ shouldn't do that and should just let the dollar do what it do and go wherever it needs to go. We're at 160 odd now to 1 US. Clive, explain to us why the IMF thinks that BOJ shouldn't intervene anymore.
Okay. Well, I don't know. I think, the IMF will can prescribe numbers. They have data, to suggest that a free market, a more liberal market, is best for any economy. But that's what they've preached. All the Western institutions, financial institutions, that's what they've preached. That's what many of the world, third world countries in particular, whether Latin America, we saw the disaster from the 1960s to the early 2000s, Africa, even some countries in Asia and the Caribbean. So they've been preaching this. I think this is their ether, a liberal free market, because it liberalizes the flow of capital and allow business to expand. But I can only say, do we have the data here to support that? That's a big question. Is the data, the experience of Latin America support what they're saying? That's another question. And you talk about priorities too. A government priority is not to liberalize a market so it can free flow unless it brings solid, stable benefit to an economy. So the government is also here not just to free up the business sector and allow it to thrive through whatever means necessary, but also to protect. As I said, the social net that the government has is not simply to hand out food and subsidize care to the community, but to ensure that the market functions in such a way that it benefits as much. And one of the best non-interventionist way to support the market is by allowing it to float. But when there are cases where the government needs to intervene, or the BOJ in this case needs to intervene, then they can intervene with minimal effect, but still allowing the players, the market players, to continue to make the market function as efficiently as it can. But I can only
disagree. So you disagree with the IMF recommendation? Then you think the BOJ should continue doing what it's doing?
Well, what I've seen so far, I can tell you that they have made dozens of prescriptions over the years, not just on FX trading, on other areas. And our government, yes, have subscribed to some of them, but we have our own data. I know that there have been pushback, and there perhaps is a pushback on this one, a very respectful pushback, meaning that we understand our marketplace. We know the psychology of the market. We know the mechanism of the market. We have the numbers and the data to support the market. And you hear the cry every day, especially from our real productive enterprises, those that make things with hands, feet, and brains, that the cost of resource, the cost of material is expensive. And we hinge even labor cost to the value of the US dollar. So there is, and they said, it will free up the dollar, but in which direction and for how long? Do we go through a period of chaos and unstable macroeconomic environment for the medium or long term stability? Is that the case? Do we have the data globally to support that? Are we talking not about the US and the first world economy, whose economy is structured differently, and mark you, whose history is different from ours, meaning that they have dominated global economy for the last 400 years. How? They have extracted through various means. And to this day, you see what is happening in Africa, especially the Sahel states, you see. So they are structured differently. They dominate and direct global institutions. So this liberal free market can perhaps work for them, but has it worked for us? Has it worked for Latin America? These are serious questions, but I think our BOJ has these answers. So this is why they have put the institutions in place, the systems in place, and they are working that system to the best that they can. And I think that they're fairly successful so far. And the market will tell you that they're fairly successful so far.
Julian, what do you think about that? Should the BOJ listen to the IMF?
I'm agreeing with Clive's assessment. Well, my camera a bit fuzzy. I don't know why. Yeah, I agree with Clive's assessment because we took IMF's advice in 1990 and liberalized our currency totally in 1991 thereabout, and it created hyperinflation for us. And between that period into 93, 94, 95, the dollar, the depreciation of the dollar was exorbitant, went through hyperinflation. So let's say 1993, the dollar would have been 1 to 8, or 8 to 1, 8 Jamaican dollars to 1 US. By the time the year ended, it would have been about 24 to 1. So that ballooning of the exchange rate caused hyperinflation to move through the economy, and it had a big role in what led to FinSac eventually. And that has a lot to do with the structure of our economy, as Clive alluded to. So there are certain sensitivities, there's historical context. There's a theory that cheap currencies means that your commodities or the factors of production can be allocated more cheaply, but that is very biased to developed countries that have large resource bases. Because let's say, for instance, you are a manufacturer, you're a net manufacturer, you're a good producing economy, because you have good producing economies and then you have services economies. Goods producing economies, they can play with certain variables that we can't as service economies. And beyond that, Jamaica is not just a service economy, but Jamaica is a service economy that's small. The US is a service economy, but the US is mixed because they're still dominant in certain industries and they produce their own oil. We are not oil producers and we're tiny. Most of our value is in our waterways and our ports. So how do we balance that? We're net importers. we import 4 times what we spend on imports 4 times what we earn from exports. So with a deficit that size, is it beneficial for us to allow the dollar to just run? So it's very sensitive. I believe that BOJ is doing what they can. I believe that while the interventions are exorbitant, they are somewhat necessary, because if we think about it, we're one of the few English-speaking Caribbean states that does not have a pegged currency or a managed currency program. So it might not literally be a peg, but it will behave like a peg, whether that's a fixed peg or a crawling peg. So Barbados, they have a managed currency program. Trinidad has a managed currency program, and there are many others. I think it's just got us and Guyana that doesn't have a managed currency program. And I think we've gone far away. I think we paid our dues. Jamaicans are feeling it to this day. We weren't 160 overnight. I'm not saying that there isn't room to be conscious to say, okay, sometimes you need to step back and allow the currency to be realistic. But at the same time, we cannot go into free fall. We've been there before. It didn't benefit Jamaica. I'll flat out say that. Because another argument is you have all this debt. If you allow your currency to run, then the economy will run more efficiently, and then that will allow you to service your debt. And that didn't happen. The opposite happened. A big part of why our debt was so high for so long was because of what happened to us in terms of inflation. And we had to borrow a lot more, and tax revenues couldn't cover our bills, and it was a total nightmare. So I think because of where we are structurally, we can't blindly follow IMF policies, because those policies were not written for developing countries. They weren't, especially developing countries that are small. Most of the textbooks are not about small developing states. Most of them are about G20 and G7 states, and they say, well, you know, work in these large economies. I mean, we're bright. You have the PhDs, do what we tell you. We have to say, whoa, hold on. It's like medicine. Just because the medication work for one person, don't mean it will work for somebody else, because that person might have a different blood type. Their genes might be different. They might have a different diet. There's a lot of nuance. And sometimes in economics.
Appreciate that context. I wonder what Nigel Clark thinks about this, because he's a deputy MD at the IMF now. Wonder if he had any hand in that recommendation. Interesting.
I wouldn't put him in that spot.
Yeah, because this has been a policy prescription of the IMF for many, for decades. It's not new, way before him. And I think they have a broad, well-structured policy, strategic policy that guides them, and he is just employed to really give some assistance or help, maybe to, because he understands our economy, the small, economies that are structured as ours. Maybe he provides some help in kind of guiding them somewhat. So I wouldn't say he played a hand in this particular prescription, but maybe he has tempered them. I think he's employed to really temper them, because he has an understanding, and a successful understanding of small economies like Jamaica.
I agree with Clive. Totally.
Sean says IMF needs to mind their own business. We have excess FX. Ryan says the IMF is to go away and leave the BOJ to do their own monitoring of the foreign exchange. Sherwayne says, yes, the big boss, them in the building, Dr. Doom and Mr. Optimistic.
See, Khalila, the Dr. Doom name not going anywhere.
Raquel says, I remember being in high school and our economics teacher talking about this, Learn, Grow, Invest. I never knew we experienced hyperinflation. Interesting. Yeah. In the 90s, up to 70% inflation one year. I remember looking through the statistics and Troyan saying, this is why we like to hear from Clive. Yeah, definitely really good perspectives from both of you this evening. I really appreciate that context. Speaking of, all of this that's going on the international scene and the local scene, and we've been looking at the stock market locally, hoping for it to revive. I saw Learn, Grow, Invest comment earlier that he thought West Indies Petroleum IPO would have been out by now. Clive, would you say that there's enough liquidity in the Jamaican market right now to support IPOs and APOs and other offers?
That's a very good question. you know, our financial market is developing. I would say that, you know, and I think it has been quite successful over the last several years. And the success story of the broader, stable macroeconomic environment can result in a successful company, create the stage for successful companies. We have seen that. Quite a number of the development of the junior market, the companies that have listed. Lasco is a success story, probably one of the most successful company, Access Financial too, on the junior market, and we've seen that right across the board. So there has been, and the market still provides some sense of, you know, support. But here's the thing: the market has its season, and usually the best time to come public is during the last quarter of the calendar last quarter, September, October, November, up into January, February, maybe March, January, February. If you look at the history over the last 6-7 years, quite a few companies, most companies have come public during this time period, right? And they were fairly stable. That's one. Two, the market is now in a doldrum because of international and some local events. For example, Hurricane Beryl. We're still, you know, we're kind of easing out of it, but there's still some after effect, right? Coming out of that, there's been a slowdown in the economy, you know, and the people are running for safety. What is safety? Safety is like bonds, preference shares, you know, these type of instruments that the principal is guaranteed, and the payment of coupons or you know, cash flow is mandated, contractually mandated. But investments like owning shares in a business, you're taking on the full brunt of the risk. You know, I think the market will ease out of those a little bit and run to safety. The point I'm raising is that we've seen the success of Barita. We saw JMB rolled over, probably about 3 instruments, probably 4 or 6 if you're counting last year to now. And we saw quite a Mayberry. MJE came public earlier this year, last year, successfully raised capital. But look at the type of capital. Fairly safe, you know, guaranteed principal and contractually obligated coupon returns, cash flow, right? So investors run for that. The timing is important, is kind of important also. During this time, if you look at the indices over the last how many years, consistently, globally, indices falls during the summer period, including the more developed markets. Indices fall during the time period. It means that people are less interested in equity. Prices are falling. So you'll see less interest in the market during this time. I don't think right now is a good time or the best time to come public. Also note this year, Trans Jamaica came public, but Trans Jamaica from it became listed, good company, good revenue flow. They negotiate their contract rate every year. That's in the contract, you know. They have a concession that lasts probably about 7 or 8 more years. So that will provide good, consistent income stream that is above inflation, above the devaluation of the potential devaluation of the Jamaican dollar. The dividend yield is quite good, attractive. So they were very, very, very successful earlier this year. As a matter of fact, while they were having the additional public offering in the marketplace at, it might have been what, $3.60? The stock was trading as high as $4.25. People are still buying the stock. Volumes in the market at $4.25 while they were having the APO at $3.60. That's how, so the point is the market, $25 billion worth of application. So that would have sucked up some of the cash. We see BOJ in the marketplace, also in the FX market, putting FX in the market, they're pulling Jamaican dollar, right? We see them every month, they have their 30-day paper, weekly paper, and we see them with other assets putting into the market to suck up liquidity. So again, a shortage of Jamaican dollar and people running for a safety would not create a good environment now for APO and IPO. I think the market should wait perhaps until the last quarter of the year when a lot of financial results are coming out, generally a lot of dividend declarations, etc., and that probably is a better time. And hopefully, we may see the policy rate, assuming the market in the US believes that, you know, the Fed rate might be reduced. I mean, the confidence is increasing. I think it's 50-50 the last reading I had, that down the road, last half, you may see a reduction in Fed rate. If that happens, we might see a reduction on our side. And if that happens, that might give some drive to the equity market. So the latter part of the year, I think, is the best time. right now is really not a good time. I don't think it's a good time to come public.
Tavares says, the money there, we just don't want the idiot offers. Learn, Grow, Invest pointing out that Barita just raised 8.5 million. D says, yes, money is liquidity there for more APOs, meaning I have money to invest. So they're saying that it just, I guess it depends on the offer. But Julian, what do you think? Is now a good time for IPOs and APOs, or do you agree with Clive that companies should wait?
In agreement with Clive, I do believe that there's some cyclicality in terms of the market. Sometimes volumes can be weak around this side. But as an investor who is still active, it's very important to look at total return, look at opportunities that have attractive dividend yield, and to not shy away from cash flow generating opportunities while still looking for opportunistic returns in terms of getting cap gains. So it's very important to not just look at the price return, but the cash flow return and how to incorporate and mix in the portfolio. How can I use the dividends that are coming into the portfolio to actually buy companies that are on my watch list at a more attractive price, so that when the market cycle does turn, when interest rates do fall eventually, I will get even a higher return, because the point at which we buy stocks is critical. What is my average price? What is my entry price? Am I entering at a lower point? Because lower entry points increases the probability of getting higher returns, because everything is a matter of odds. And that is why it's important for us to have a lower average entry point into the stocks that are on our watch list. And can we look at repositioning? Is it that I need to look at an opportunity that wasn't attractive 2 or 3 years ago because of where it's trading? Because again, there's a story behind every stock, and sometimes the story changes based on the valuation. Is it that, okay, at a price of $18, X company didn't make any sense, but now it's at 12, now it's at $10. Can I now consider something I didn't look at before? So it's about taking a broader look, being unemotional about it, and building your conviction based on what drives the returns in the company. Does it have sound management? Is it vulnerable to the risks we've spoken about earlier on the call? And also the entry points. Right now, entry points are very attractive. Volumes might not be where we'd like them to be, but can we continue to build slowly? Sometimes you have to just scrape up the units, scrape up the units, scrape up the units. And before you know it, you're in a winning position in the next 18 months when interest rates, let me not say when, if interest rates start to fall, it will position you very well, because you'll be at the top of the cliff, ready to take that big leap to even higher heights.
I think Lanesra in the comments has nailed it. Money is here, but the confidence is not there.
Yes, it's something we need to work on. And that is why platforms like Taking Stock are very important, because we don't have Bloomberg in Jamaica talking about Jamaica. We have the service, but it's talking about everywhere else. And this is our homegrown base. This is our Bloomberg equivalent. This is what the world watches when they want to understand, when they want a window into Jamaican markets. And it's very important for us to use the data, because many investors know Jamaica, but they don't know Jamaica's data. They don't know crime is dropping. They don't know debt is dropping. They don't know our fiscal position is improving. They don't know that we have the most active and largest and liquid capital market in the Caribbean. They don't know that we have the most successful junior market. They don't know that about Jamaica. They just know Jerkin Beach. They don't know anything else. And we have to push that. Nobody else is going to do it.
So true. So true. There's one topic that I want to touch on before we wrap this segment, and it has to do with the story of the day, the big news announced by Energy Minister Daryl Voss today, that the government will not be renewing JPS's license. It's caught, I think, a lot of people off guard, like, huh, what? Is that even possible? So, Julian, you've been following this story. What does that even mean? Like, what do you mean you're not going to renew the monopoly distributor's license?
Well, the truth is, Kalila, it's a surprise to us all. I think we'd be dishonest to say that we saw this coming. It's something we're still unpacking. So I do think there is a balance. One, there's an argument for a change in our energy mix, and we need to observe as the situation evolves and as we get more information, if it is that we're going to modernize and improve our energy mix as a country, incorporate more solar, more wind, and more alternative sources of energy, and take advantage of the type of climate that we have. But at the same time, there's an argument being made for our readiness for that switch, A, and B, do we have the infrastructure to accommodate that switch in terms of capacity, and largely the managerial expertise, because energy is very complex and specialized. It's not like you can just jump into it because you're bored or you just want to figure it out. Energy is not something you figure out. You have to get it right. There's zero room for error. Does government have the capacity, the know-how, the technical expertise to run energy and to have proper energy management systems in place to have a smooth transition if it is that any of this is true and it goes according to plan? So it's a delicate balance.
So let me read the statement from Minister Vaz today. This is what he posted on his Instagram. And to be honest, I didn't have time to go over everything. I really wanted to deep dive into it today, but I had a bunch of other things going on between time I saw this breaking news and this show. But this is the statement from Vaz. I wish to advise the country that this morning, in my capacity as Energy Minister, I wrote the Jamaica Public Service Company, JPS, and gave formal notice of the government's intention upon expiration of the current all-island license not to renew under existing terms. My letter to the JPS was written pursuant to condition 27 of the license, which provides for the government of Jamaica to acquire the licensed business at the expiration of the term of the license. That expiration date being July 8, 2027. It is not the intention. Okay, so I saw that line. I'm like, oh, this means government is going to take over JPS? But then he continues, it is not the intention of the government of Jamaica to take charge of the operations of JPS. Prior to the expiry of the current license in 2027, we intend to negotiate new licensing terms and conditions with potential investors which are favorable to the people of Jamaica. So it looks like they're taking back the license, potentially turning over the company to a different investor, or perhaps even the same set of investors under new terms. So 2027 is when this would take effect. And just to remind you who owns JPS, JPS is majority owned, 80% owned by a Japanese company, Marubeni, as well as a Korean company, Korea East-West Power. So they together own about 80% of JPS. The government and other minority shareholders own about 20% of JPS. We've been hearing about the government wanting to divest its 20% shareholding since before COVID. I haven't heard anything about it in recent times, but now we're looking at, okay, what's going to happen to the majority 80%? Could it be that even they may want to take back that license and divest the whole 80 via the stock exchange, the whole 100? I don't know, but very interesting developments. Any thoughts on this, Clive, before we go?
Well, I have not read the article, right? I don't know what the agreement is. That is the whatever legal document that guides the arrangement, the ownership arrangement with JPS. But I suppose we'd have to have a look at that and to also ask what are the deficiencies so far that this contract would need to be renegotiated. I think there are some questions that need to be answered. I remember that there has been this talk for the longest while to privatize the government shares in JPS. Our government will still have strong oversight because this is a strategic asset, JPS, and electricity generation, very strategic. So government will always have some oversight and some input in decision making. But how does that impact the probable listing of that 20% shares? Will it ever come to market, as a matter of fact, if this is renegotiated? There are quite a few questions to be asked. Also, JPS, the larger part of JPS function is distribution. Because there are several entities that generate electricity and then sells it to JPS, who then distributes it. The efficiency of that, I'm not sure if you can have too many players in the market for that. Meaning, who will own the light post? Who will own the wire? Who's going to stretch it over the hills into the valleys, 80% Jamaica, who's highly, highly hilly and mountainous. So the efficiency of several owners, I'm not sure how that will work out. But the thing that the minister knows, and there's something written in the present contract that he apparently believes should be adjusted. So I'm sure that more information will come out soon.
Yeah, there is a lot to dissect from this announcement. I need to catch up on it myself so we can do bottom line on it and perhaps talk about it next week. We could hopefully invite Minister Vaz on next week. We invited him on tonight, but he was unavailable. He had another commitment already, which was expected. Everybody's going to want Daryl Vaz on their show today, but maybe by next week, we'll see what unfolds and we can have a more fulsome discussion, hopefully. Thank you guys so much for joining us. This has been a great discussion, Clive and Julian.
Thank you, Kalila, and congrats
AKA
again.
Dr. Doom and Mr. Optimistic.
and Kalila, interestingly, we have this discussion quite a few times here, our research people. You are one of the few entities that have remained viable online, giving good information to the investing public right throughout. Many of them, when the markets started to dip, many of them went by the wayside. They disappeared. Where are they? They said, did they have value coming to the market in terms of information? Perhaps not. Where are they now? Because information is valid. Well, then the good, what do you call it, Julian, the trough or the gains in the market, information is valuable at all times. So where are they? So congratulations again.
Thank you.
That's from Mr. Optimistic. That's not even from Dr. Doom. So you know what I'm going to say already. So said all of us.
Yeah, man. True.
All right. Thank you so much, guys. We'll take our final break. Oh, I think we have a giveaway. Yes. Before we take our final break, I have one last giveaway. And I want to say thank you for staying with us throughout the show and for rocking with us. But the big five, and this one is courtesy JMB. It's a $10,000 gift certificate to purchase stocks through your JMB Emma account or units in a JMB unit trust fund. So $10,000 in stocks. Hey, it's a good look. Here's your question. It's a true or false question. True or false? The JMB Moneyline app is the only financial app in Jamaica via which you can do both your banking and investment transactions, including buying and selling stocks in one app. True or false? Easy question. And first person to answer that question is going to win yourself a $10,000 voucher to JMB for your JMB Emma account or a units in a unit trust fund. JMB unit trust fund. We have a winner. Congratulations to Leon Ferguson. Leon Ferguson, you answered true. That question actually is true. The JMB Moneyline app is the only financial app in Jamaica through which you can do both your banking and your investment transactions, including buying and selling stocks in just one app. That is true. So congratulations, Leon Ferguson. And all you got to do to collect your prize is send your contact information to Sashell, that's SASHELL, at moneymediaja.com, along with proof that it is your YouTube page, and we're going to get that prize to you. We'll take our final break and come back. So you guys are always up in my DMs asking if I do mentorship or if you can get my advice. Well, good news, I've finally created a mentorship program just for you. It's called Money Mentorship, and it's the first Monday of every month inside the Money Mission community. Now, let me tell you from now, it's not free. All right, because if it was free, too many people would show up and I wouldn't be able to give you the one-on-one personalized attention that I know you really need. But I did make it affordable. The link is in the description or the comments for more information. Let's get this money.
Let's get this money.
Boy, when I seen Reese in that little clip, let's get this money. She was like 1 or 2. I don't remember if she was even 2 yet. And now she's 7. So that's just to tell you, Taking Stock Money Media, 5 years old now. Taking Stock is almost 6. We started the show October of 2019, and Clive is right. Through good times and in bad, I'll be there. I'll be there. Just call my name and I'll be there. All right, let's take some of your comments to close out the show. I saw a lot of comments coming in. D says, when I heard what the IMF was recommending, I thought they were insane. I feel that let inflation run wild. Lanezra says, can BOJ sustain the constant intervention with the US dollar in the market? Yes, they can. They have $5 billion in reserves. So for now, yeah. Learn, Grow, Invest says, we waiting for Money Media to IPO. Don't know about that. T says, you hear that, Kalila? Somebody was telling them that they need to IPO first, and they said, we can't IPO before Money Media, LOL. Oh, we are nowhere near being ready to do anything like an IPO at all. Let's see what other comments we have. Sean says, Jerk Beach and Bob Marley. Yep, that's the reputation. That's all they know about Jamaica, but they don't know the data. You're absolutely right. So that's why this platform and others like it are so important. By the way, guys, check out our website. We do have our website. Anything that you miss on the show, you can always catch up on at moneymediaja.com. That is our website. All our shows are there. If you're not getting emails, or if you're not, if you miss a show, you don't have to go to YouTube or whichever different platform. Everything is consolidated at moneymediaja.com. So check out the website. And then the courses side, we host over at moneymissionja.com. So if you want to learn how to invest, if you want to create your financial plan, if you want to do something to get yourself out of debt, all of that stuff is over on moneymissionja.com. And then my personal website is KalilaReynolds.com, where you can book me for speaking engagements and so on. So speaking of the JPS situation now, Raquel says it means competition and maybe savings for us, hopefully. Eileen says, good discussion, gentlemen. Yes, really good discussion this evening. Roswell says, JPS already milked enough so they can go if they want based on conditions. Lanesha says, that's true. Big up KRM. Thanks for the valuable information. Thank you once again. Christine says, thank you. Julian, Clive, and Kalila. Raquel says, 5 years and fine. Tonight was popping. Tonight chat was popping. The chat is always popping. One thing, I give it to you guys. The chat, you guys really, you make the show with all your comments in the chat. Alex says, no runner-up prize. Not this time, Alex. No runner-up this time. But thank you so much for all of your comments and for tuning in yet another week. Congratulations to our giveaway winners this week, Worrell Anderson, Ramon Walker, and Leon Ferguson. You guys win yourselves, well, Worrell won a Money Mission workbook, which is available now on Amazon.com. It should be in Fontana by now too. They told me earlier this week, but I haven't checked yet, so I'm not 100% sure, but it should be in Fontana at, I believe, all the locations this week. You can collect or purchase your copy of the Money Mission workbook over at Fontana Pharmacy. Worrell, who are the other winners? Leon, I think. Put it back up for me, please. Ramon Walker, he won the gift basket from Sagicor, and Leon Ferguson won that $10,000 gift certificate from JMMB. There will be other giveaways on my social media platforms. So follow me all over social media. I'm at Kalila.money on Instagram, at Kalila Money on TikTok. And what am I on Twitter now? I think it's at Kalila.money as well. And we also have the business page, Money Media JA, at Money Media JA on Instagram. Follow us everywhere. And of course, subscribe to the newsletter at getmoneynews.com. That's getmoneynews.com. Get on that mailing list. And you never know, you could be the winner of something yourself. Thank you once again to our hardworking production team for making the show possible. Thank you, our viewers and our commenters, our community, for making this show possible, for tuning in every single week Thanks to all of our sponsors for supporting us throughout the years. Thanks to, who else I need to thank? I want to thank me, in the words of Snoop Dogg. Thanks to God, thanks to my mom, thanks to my dad. Thank you all. It's been a great week having you once again. And I'll see you next week. Until then, remember, investing is the new sexy. So let's make it cool to talk about money. I'll see you next week.